Welcome to the Economy Magazine at I-24 News, where we provide a daily view on world markets and the global economy. I'm Natalie Ehrlich. Well, coming up today, markets still in the crosshairs over China. We speak to Knesset member Erel Margalit on the evolving Israel-China relationship. An expert analysis on what Egypt's major gas find means for Israel's own nat gas industry. Let's start now with the headlines. Well, more bad news out of China. The manufacturing sector losing steam, according to official data released Tuesday. China's Manufacturing Purchasing Managers Index for August fell to 49.7 from 50 the previous month. A number below 50 indicates a contraction. Well, the news sparked sell-offs across the board in Asia. Shanghai's stocks down 1.2%. The Hang Seng 0.8% lower. Japan's Nikkei closed down almost 4%. South Korea's Kospi was off 1.4%. Meanwhile, in Europe, stocks extended their losses in the afternoon. The DAX down 2.54%, the FTSE down 2.38%, and the CAC off 2.25%. Meanwhile, in the U.S., Dow futures pointed 300 points in the red. Well, for further insight on the direction of world markets, we are joined on the phone by Ron and Sana from the greater New York area. Thank you very much for being with us.
Thanks for having me, Natalie.
Well, Ron, we're leading here up into the open. What's your expectation for U.S. equities today?
Well, it looks right now like we're going to open about 400 points lower. The New York Stock Exchange has invoked Rule 48. This is a little-used rule that is designed to limit market volatility when things get as disorderly as they appear to be this morning. This is the second time we've seen this. The last time it was used was the day that we fell 1,000 points right after the open. So looks like it's going to be a pretty rough day. It's China, it's Europe, it's the weak manufacturing data out of China, the weak services data, all triggering again these concerns about global growth. That's pushing oil prices back down, which had rallied yesterday. So we're in that spiral again. I suspect this is a retest of the lows that we saw during the depths of the correction. If they hold, this was just a correction. If they don't, we have some other issues on our hands.
All right. As you mentioned, it is China. Is this more hype, as Chinese media has asserted, or is the situation worse than we're being led on?
I would go with the latter over the former. It's what strikes me as extraordinarily odd is the fact that a Chinese business journalist was forced to admit a crime in reporting negative stories about the market during the depths of their sell-off, and that was ultimately detained by the Chinese government. We have brokerage house officials being detained. China is looking for short sellers, hedge fund managers, scapegoats in the sell-off when it's effectively their own mismanagement that exacerbated the downdraft we've seen in the market. And then when you look at the economy, I think it is weaker than many people would have guessed. Some are now saying they're growing 5%. Others would say they're growing less than 3%. I'm in the latter camp. When you look at a variety of different indicators, China is probably in, for them, what is considered a real recession as opposed to a growth slowdown. So I think that's where they are, and certainly the world wasn't quite ready for that.
Well, thank you very much for bringing these highlights to our attention. Very much appreciate it. Ron and Sana in New York. Continuing now with financial headlines, the Eurozone manufacturing growth also produced weaker data, falling to 52.3 last month. Still, though, above that critical 50 level. The news follows 6 months after the ECB started injecting 60 billion euros into the economy, and a day after inflation came in at 0.2%, well below the ECB's 2% target. Well, U.S. crude oil ended almost 9% higher on Monday at $49.20 a barrel, its highest level since July 21st. Thanks to U.S. data pointing to falling output and also news that OPEC was set to discuss low prices with other producers, oil finished a 3-day rally almost 30% higher. Meanwhile, the Israeli PM reached a last-minute budget deal with members of the Arab list on Monday, adding 900 million shekels to the Arab sector. The deal was welcomed on both sides of the political spectrum, with Netanyahu saying that it was, quote, another step designed to integrate Israeli Arabs into society as equals, end quote. The agreement avoids a potential strike by the Arab sector. Well, as we've discussed, Chinese markets still dominated in financial headlines after tense weeks of market volatility and bold government interventions. Reporter Shelby Weiner now recaps the major events and what may unfold next.
Global ambiguity, the crisis in Greece, Chinese margin trading, and falling stocks, all factors on the road to China's current financial crisis. The calamity began brewing as progress stalled in EU bailout negotiations.
The problem is not Greece. The problem is the Eurozone.
Then the slide in crude oil prices pressured Australian shares and made Asian investors increasingly uncertain.
How can the markets improve?
And margin debt, or the use of borrowed cash from brokerages, reached 8.5% of the value of China's tradable shares, well above the 4.6% Taiwan reached during its market bubble. And in the past 2 months, the situation has only grown more ominous. It began with a series of market regulations. China limited short selling, cut interest rates and trading fees, and opened up pension funds to invest in stock.
We have a rough calculation that about 2 trillion won in pension fund is available for investment.
Then, July 1st, poor-performing manufacturing data came out, contradicting China's official GDP numbers. Stocks fell sharply. A week later, Beijing prohibited stock sales by major shareholders and ordered executives to buy back shares in their own companies in what may be the most overt government intervention the market has seen yet. A third of Chinese companies ceased trading in response to the tanking stock market.
The macroeconomic data are not good at all. That show China's economy slowing down, and especially exports.
And then the central banks devalued its currency in hopes to curb China's financial distress, the most significant downward adjustment to the Chinese currency since 1994. On August 19th, the Chinese market dipped 5%, but miraculously closed up 1.2%. A cloud of suspicion surrounded the numbers.
The downward adjustment of the renminbi will have a stimulating effect on exports.
But the efforts could not control the unpredictable stock market. Investors began selling off large amounts of shares, frightening the market and spawning even more selling. And then, Black Monday. Chinese shares suffered their largest one-day fall ever, crashing nearly 8.5%. In response, Beijing cut interest rates for the 5th time in 9 months, but it was to no avail.
All those measures are not very effective, except if they pour money into the markets.
The Chinese markets began falling on the back of poor macroeconomic data. They continued to fall after, and perhaps because of, ineffective government efforts to prop up the markets. Efforts which only reinforced the idea that the economy was not built on proper foundations. The uncertainty has scared off many risk-averse investors, leaving only the boldest players in the trading game. And the markets now may seem to be on the uptick, but it's unclear whether this is the beginning of a real recovery or whether Black Monday was only the first of dark days ahead.
Well, for further understanding of the story in China and also Israel's business ties with the world's second largest economy, we were joined earlier by one of the leading Knesset members from the Labor Party. On set, we are joined by Erel Margalit, Israeli Parliament Knesset member. Thank you so much for being with us.
Thank you for having me.
Well, as a founder of Jerusalem Venture Partners, one of the most successful VCs here in Israel, how has that experience shaped your experience on the Knesset?
Well, I think it's time that the innovation and the daring and the group effort and all the good things that we did in the startup nation economy, it's time to bring some of these thoughts into the Israeli Knesset and the Israeli government. And I'm enjoying myself. I'm bringing a lot of the talents and a lot of the things that I was doing as an entrepreneur into being a public entrepreneur.
Well, speaking of that, 3 Israeli startups recently competed for a major prize in China, and 2 of them, Diacardio and Wares, both won this $1.5 million prize. Describe that experience of fostering development of these Israeli startups on a global stage.
Well, I am the head of the task force of friendship between the Israeli and the Chinese parliament. And one of the things that we're doing, because I did a lot of business as an entrepreneur in China, and there's a lot of interest from Israeli companies and Chinese companies in Israel, what we decided to do is to give it a big boost. So there's a new economic attaché and and a new ambassador of China to Israel. And what we're doing is we're creating competition and we're creating awareness and we're creating a lot of buzz around Israeli, Chinese technology cooperation. And as a Knesset member who knows something about business and something about China, I want to take it to the next level.
How are you taking it to the next level? How has this relationship evolved?
Well, if you look at the last year, I think we made a lot of progress. For the first time, major Chinese technology companies like Alibaba and others invested in Israeli startup companies and funds that are focused on our Israeli technology. I think the Chinese made it very clear that Israeli technology was one of their top priorities in the next 2 or 3 years. So institution investors from China, technology investors from China are all finding their way to be involved in Israeli technology. So that was step one. Step two is going beyond technology to the infrastructure projects, to the big food-related agriculture projects. So obviously China invested in Tnuva, which is the biggest Israeli food company. But also China just created the Chinese Silk Road Economic Development Infrastructure Bank. And I was insisting upon Israel being a part of the founding members of that bank, so that if they're building free trade zones between China and Europe, I want the Middle East and Israel to be part of it as well.
Well, you mentioned this really important development here with this new bank. Do you see Israel pivoting closer to China versus the United States?
No, I think Israel and the U.S. are still going to be the core of our economic and diplomatic relations. But I do think that China is interesting as well. Obviously, there's a major crisis in China now and world crisis economically. So we need to look at things very carefully. But I think that there's a real opportunity because, look, I don't want China to go to Iran and have all the deals with them. I want China to come to Israel. I want China to have a facilitating role between projects that we want to build between Israel and Jordan, Israel and Egypt, maybe Israel and the Palestinians. So if the Chinese want to contribute, I want them to be part, because part of the battle for security is the battle for economics here in the region, and I want the Chinese on our side.
And you mentioned the slowdown that we've seen in China. Is this something that we should be worried about? Israelis, should they be worried about this China slowdown?
I think everybody should be looking at it carefully. We had such a process between 2001 and 2004 where things really slowed down in the communication space and in the software space in China and elsewhere. And so, yes, I think Israeli companies that are basing a lot of their sales on the Chinese market need to be careful. I think that there's probably going to be a need for insurance of some of the exports and some of the processes as well. But by and large, I think that Israel has gotten itself into a leadership position, not only when the tide was up, but when the tide is down. When the tide is down, if you're still active, you have a leadership position, and I think that's what's important for Israel.
For further insight on China and other matters, we are joined on set by Niamh Ellis, business correspondent at the Jerusalem Post. Thank you very much for being with us.
Thanks for having me.
So China. What's coming next?
You know, if only anyone knew exactly what was happening next, they'd be able to make $1 million. I think that what we can expect is that there's going to be a lot more turmoil in the stock markets there. You see the government coming back in and starting to intervene again. There was a period where it looked like they'd said, you know what, we're going to let this run its course. And that was a really positive sign that they were letting the market play a more decisive role, even though it didn't look great. Now they've changed that policy. But on the other hand, I think the one thing that's important to remember is that the stock market is not the Chinese economy. You see stock markets in other countries and they have the same value as the entire economy. Here, the stock market is worth about 1/3 of the Chinese economy. And the thing that really pushed it down was bad productivity, bad production. So we see that their service sector is bigger than production. It's still good. We see that they're still buying things. They still have good consumption. Their housing market is pretty stable. So even though there is cause for concern here, it is not a global financial meltdown kind of scenario just yet.
Okay, well, let's stay hopeful on that front. What about nat gas?
Yeah, the natural gas here has been a really interesting development, that there's been a huge find in Egypt, right, just off the course. And everyone here is sort of freaking out. But I would tender that anyone who tells you what that means is filling in a lot of gaps that we don't have answers to yet. Egypt has had natural gas reserves discovered for years, and they've failed miserably at getting them implemented. The thing that Netanyahu warns about here, if we don't get a good policy in place, that it'll stay in the ground, that's exactly what's been happening in Egypt. So it's not 100% clear what's going to happen now, because they have this huge reserve, much bigger than the one that we have here in Israel, but it's not sure if it'll get developed, how quickly it'll get developed, if they'll be allowed to export it, if the price is going to be competitive with Israel's. So these are a lot of question marks that we're going to have to fill in before we can decisively say how it's going to affect Israel's natural gas market.
Those are really excellent points. Thank you very, very much for bringing that to our attention. Niamh Ellis of the Jerusalem Post, business correspondent. That wraps up our show today. Stay tuned every day for all your global business coverage. Here from the Jaffa Port in Tel Aviv, I'm Natalie Ehrlich. Be sure to watch us on our website as well. It's i24news.tv. Thank you so much for watching.